Jeff, Zach, thanks for joining me.
Hey, Steve.
Hey, we're talking today about signs of a bottom in commercial real estate. Uh, Banks and lenders are seizing control of distressed commercial properties at the highest rate in nearly a decade. That's often signs that you're kind of finding the bottom where you're really kind of washing owners who aren't going to be able to afford or manage or don't want to be in the property out and getting a new wave of buyers, fresh capital, new ownership in. Um, In the second quarter, portfolios of foreclosed and seized office buildings, apartments, and other commercial properties reached 20.5 billion. That's according to MSCI. 13% increase from the first quarter and the highest quarterly figure since 2015. So some of your thoughts as we really kind of see signs that distress is working its way through the system at this point.
I mean, look, you kind of hit the nail on the head. Fresh capital. Most pricing and was potentially elevated related to low interest rates and compressed cap rates for a while, which kind of created some artificial values that were just that, artificial. It was a lot of smoke. Um, So what you're seeing when you reclaim these and you discount them to where they're supposed to be, you underwrite them properly, they start working. You get that fresh capital. That's when you see that bottom. People are literally coming in and waiting and biding their time to when valuations start making sense, and that's usually after the worst has passed. I know it feels like the worst when you're in a bottom, but that's usually when the worst has passed. So I think that you are seeing that at this point.
Yeah, I mean, I think Zach hit the nail on the head. I think it's one of those things where you're feeling I'd say people are feeling the compression, and it's probably right. The past is probably past. I mean, the worst is probably past at this point. I'm sure there's going to be some one-offs that are going to make the papers and mark that. Well, no, maybe we still haven't hit the bottom, but I think as a whole, we're probably seeing more positive effects now.
Yeah, I think this is the point really where you're seeing people adjust to kind of the quote unquote new normal. And for some markets, they really kind of have returned to how things were pre-COVID. For other markets, they're in a different environment. Right. That can be, we've certainly seen some downtowns that are really struggling. We're also seeing some suburbs that are kind of benefiting from a move away from those downtowns. Some regions that are doing better than others. We've got properties in Miami, and I think people in Miami are adjusting to prices are going to be higher. There's a lot
Yeah.
more people here. They're going to be competing for space, and that's the new reality. And then downtown San Francisco is just in the reality of there's a lot fewer people wanting space here than there used to be. And that's the new reality. But I think, yeah, we're at that point, for better or for worse. And when it comes to the for worse, at this point, people are kind of giving up on hope as a strategy, and people with more realistic views are moving in, adequately capitalized in a lot of cases. So yeah, I'm hopeful as long as, knock on wood, we don't get a deterioration in the economy or some other curveball thrown at us. That yeah, we're seeing a bottom, and I think we've also maybe seen this um, also kind of demonstrated by what we've seen in the public markets with REIT activity that has been up and it seems to have formed a bottom there also. So I think we've got a few signs, at least from market participants, that they're looking at this as a bottom and starting to come in with fresh money.
Yeah.
Yeah.
I mean, you look at some of the biggest companies in the world, like BlackRock, Blackstone, raising funds to go buy stuff right now. They're got more people on their payroll and they do more research than anyone. They're going to know better than most other people. And they're coming in and buying that fresh capital, and they don't buy at tops. They're coming in and they're kind of setting that bottom, and it's that capital recapitalizing. So
Yeah.
I think
I mean,
it's behind us.
I'd probably add to it as well as banks are a little bit more willing to get creative in how they're handling, defaulted debt, that instead of just throwing it out and throwing it onto the market and see if we can auction it off and do whatever else, they're more well capitalized this go around, and they want to see if they can keep things from going under and having to park capital to offset some of the losses.
Okay, thanks for the insights, guys. Appreciate it. If you enjoyed the video, give us a thumbs up. Click subscribe if you have not already, and visit our website, selectfincap.com, and register to get a look at exclusive investment opportunities in the commercial real estate space. Thanks a lot, guys.
Thanks, Steve.